thank you very much for your very kind words on the activity of this committee and this parliament. Now we start with the intervention of our members. The first speaker is Markus Ferber.
Ja, vielen Dank.
Yes, thank you very much, President Draghi. Well, I'm sorry I'll be speaking German. At least I'll do my best to speak German. Of course, I'm Bavarian, so it's not easy. On behalf of the EPP Group, I would like to thank you, President Draghi, for your open... Okay, I'll start again. On behalf of the EPP Group, I'd like to thank you warmly for the open manner in which you've always come before us, and on the many occasions you've entered into dialogue with us, not only here in the committee, but also on our visits to Frankfurt and elsewhere in the European Union where we've had opportunities to meet. It's something we've always appreciated. It's a benchmark that you've set for any potential successor in future. Two questions. Recently, the Commission published a communication sketching out the international role of the euro, and particularly the role of the euro as a reserve country. What consequences would you draw from this project for monetary policy? Do you think that there would be a problem when you have the US Fed controlling the major competitor of the euro, which is carrying out a much more restrictive monetary policy than the ECB? Do you think that there's a turnaround coming, an end to loose monetary policy? And the rate curve is being put under pressure by the Fed's policies. The European Court of Justice is looking at the expenditure of the EU, but also looking at the work of the ECB. The European Court of Auditors looked at the capacity to respond to a crisis and the, so let's say crisis response and common supervisory mechanisms. So these are core activities for a central bank. What we've heard so far is that the ECB has not yet got all of the necessary documents available to carry out the appropriate assessment. So why is it that the ECB is refusing to cooperate fully with the European Court of Auditors, and how can this situation be improved?
Thank you. I think you asked me two questions. First of all, how would an expanded international role of the euro affect monetary policy? Well, first of all, we have to get there. And we have to ask ourselves, why our international role not as big as one would guess from the strength and the size of the euro area economy? And the answer is basically very simple. Complete the banking union, complete the capital market union, and at that point we will have an international financial sector which is comparable with the US, and very likely an international role for the euro as big, as large, as overpowering as the US dollar. No, there aren't any necessary links between the international role of the euro and monetary policy, but certainly we'll have to take into account more than we do today, the spillovers from other or into other jurisdictions. We do take into account the spillovers today, but certainly the link will certainly be more direct in such a future. In terms of being more or less loose monetary policy, well, we don't see that, frankly. I mean, the US probably had, if you judge by and large, they started QE many years before we did. And now they've stopped, but they are in a completely different position in the business cycle. So I don't think one can compare easily the degree of looseness of a certain monetary policy. But certainly the US started way before us. And so that's the answer to the first question. Now to the second question is about the European Court of Auditors. You know, I mean, we certainly, the bottom line, I'll go through the detail of this, but the bottom line is we certainly stand to cooperate. And we've shown, I think that we produced something like 500 documents upon their request, 6,000 pages. We held 38 meetings and teleconference with the European Court of Auditors, and we gave all the information they wanted within the mandates, within the respective mandates of the two institutions. So the treaty defines the European Court of Auditors' mandate to examine the operational efficiency of the management of the ECB. This boundary to the ECA's mandate, the European Court of Auditors' mandate, has been consciously set by the legislator to safeguard the independence of the ECB. Moreover, in 2017, the Commission broadly concurred with the ECB interpretation of the legal provisions of our statutes and in the SSM regulation. So, having said that, as I said, we plenty of cooperation, collaboration, we stand there, but within our mandates. Thank you.
Thank you, Pervash Beres, for the S&D Group.
Merci, Monsieur le Président.
Yes, thank you very much, Chairman. On behalf of the Socialists and Democrats Group, I'd also like to thank you for the quality of the cooperation that we built up together between the European Parliament and the European Central Bank. This has largely been thanks to your presidency. The relationship has evolved. You'll remember your first hearing when you were a candidate to becoming president of the ECB. I asked you some rather vicious questions, and some of my friends who know international organizations state that your knowledge of the financial markets would make you a great president of the central bank, and I would like to congratulate you on your work. So, as for the questions, what do you think about the situation on fiscal policy? We get the impression that in the Eurozone, monetary policy tends to be determined by an under-evaluation of the need for fiscal policy and what needs to be corrected there. Secondly, I'd like to follow on from the question of the previous speaker. We've got a relaunch of the debate on the international role of the euro, and some people are presenting this as a kind of escape route. Well, I agree with you when you say that the euro is not a complete currency with a full centralized governance. Well, without full banking union and capital markets union, it can't have a strong role at the international level. Is this understood sufficiently in the Commission and at the national level?
Question. The first question, what monetary policy, I think everywhere, but certainly in our part of the world, has to avoid is fiscal dominance. And because otherwise the central bank loses its independence and therefore its credibility. There have been several instances in the past, not in the Eurozone, of course, but in other parts of the world, or before the Euro was actually in place, where central banks were deeply affected by fiscal dominance. And I would say one can argue that they did lose their independence, and the consequences were clearly in the inflation rates and the unemployment rates, both of them being very high all throughout the 80s. So that's the main thing we have to look at. Having said that, can we improve on the existing fiscal rules? Oh, let me step back. There is a big difference between fiscal policy and monetary policy as far as integration is concerned. In the monetary policy area, we moved from the 80s, where integration and coordination was ensured by rules, a rules-based system. We took note of the failure of that system, And our founding fathers of the euro moved towards an institution-based integration of monetary policies. This didn't come from scratch. I mean, it came from after 15, 20 years of failures of a rules-based. In fiscal policy, this transition hasn't taken place yet. We are still rules-based. And the functioning of these rules, now it's quite fashionable now to criticize these rules, but in fact, I think they were actually they've been very, very useful. Just think about how the deficits and debts could have evolved without these rules. Can they be improved? Surely. They have to be improved. They can be improved. And I'm pretty sure the coming months and years will show further improvements. But eventually, and I've said this on other occasions, eventually I think the ultimate form of better coordination is one which is going to be based on institutions as well as it is in the monetary policy space. On the international role of the euro, naturally, I think it's a good discussion because it really constrains us to focus on what happens in jurisdictions where their currencies actually has a very big international role, the US dollar. And so we look at that union and we see that that union has not only has a well-functioning capital market, a well-functioning banking union, also has one budget and one government. And we are not one country, however. We are several countries. And so we have to move into some direction into making our currency area a better currency area because it's not yet an optimal currency area. It has many fragilities, and we've just experienced this during the crisis, and gradually, consistently with the political developments in the different member countries, we are moving into that direction. Thank you.
Thank you, Bernd Lucke.
Herr Draghi, ich möchte Ihnen ebenfalls danken.
So, Draghi, I too would like to thank you for your kind words to this committee. I have to say that I'm not going to be working with you to complete the Eurozone because I don't think the euro is a suitable currency either for the Eurozone or for the EU as a whole. And I don't agree with you that the ECB is sticking to its mandate. I think it's actually going beyond its mandate, as you know. So to that extent, we're on different sides of a battle. I think you're a very good fighter, but I think you're fighting for the wrong thing. Nevertheless, I'd like to thank you personally for the way you've actually conducted the dialogue here. This is one of the best examples of somebody coming along and talking to the Parliament. You're so stringent in your discussions. You come along with excellent arguments. So thank you very much for having made it possible for us to have fruitful exchanges with you. I have two questions. One question is the set out of the situation. You said the ECB have said the PSBB has now been run back and there's not going to be any net purchases. But in the light of the fact that the PSBB is an element of the ECB, do you think that it's possible that the net purchases in the course of this year, so that 2019, will be taken up again in order to increase the stimulus? And for this reason, for which reasons would that possibly be necessary from your point of view? And then my second question is an issue that we've often discussed, which is the time of day. You probably know that there's a study by Mr. Houston which says that within the ECB, the national banks, which could be insolvent if there's a state insolvency with a loss of capital to other countries. And I think that that could play a very major role. Could you exclude the possibility of a national central bank, as set out in the study, would end up being unable to pay, would, in other words, become insolvent?
Thank you, thank you. Thank you also for your thanks, especially appreciated because they come from, exactly as you said, from someone who has very different opinions from the one I kind of defend and speak about. But let me first just touch on a point about our mandate, because that's linked with the rest of the answer. One can have subjective doubts on whether our action is within the mandate or not. But the point of fact is that the highest court in Europe has sanctioned the fact that we've been operating within our mandate. And the tools we've used are a legitimate part of the toolbox that we use and we may be using in the future. Now I come to your question immediately. As I just said, we have several tools. We have the forward guidance about interest rates, which is both date and state contingent. And we have we stabilize now. We are not purchasing any longer on a net basis. And we stabilize the stock of the balance sheet of the European Central Bank. But we'll certainly continue purchasing bonds in order to stabilize the stock as these bonds come to maturity. So we have the forward guidance and we have the reinvestments of the stock, which, by the way, this year are going to be pretty sizable because we talk about 15 billion euros a month in that ball game. And then, of course, if things go very wrong, we can still resume other instruments in our toolbox, one of which is what you said before. So there is nothing objecting to that possibility. The only point is, under what contingency are we going to do this? And at this point in time, we don't see such contingency as likely to materialize, certainly this year. Certainly not this year. Now, the second point is about what happens if. So I wouldn't want to speculate on contingencies that may happen in the future. But I can just say a few words about the underlying worry that your question reveals, namely the increase in Target 2 balances. And since we can say, I think we discussed this on other occasions, but the main fundamental factor behind the increase in Target 2 balances is the decentralization of the implementation of our monetary policy. So it essentially depends on our monetary policy, on QE, on the net asset purchases, this quite remarkable increase in Target 2 policies. So whenever the payments by central banks for the securities purchased are settled across borders, Target 2 balances can be affected. So I think we should look at these balances from this perspective. The fact that they go up, by and large, most of the times, I would say, reveals our monetary policy. Then we certainly monitor increases that deviate from this trend, which accounts for the largest increase in Target 2. And we certainly have to look at that, and we monitor that. But on that ground, we had increases in certain countries' Target 2 balances, and then decreases by year-end last year. So you see, it's kind of difficult to assess whether these balances are actually following trends or capital flows, in fact. More generally, in any monetary union, you have countries that are in a deficit position and countries that are in a surplus position. And again, if we look at what happens in the US, which certainly is a more complete monetary union than we are, you had this status now for hundreds of years and for 100, whatever, since the beginning of their existence, and the monetary union works well. The key point here is not so much, I understand we have different perspectives here, but the key point here, as far as I'm concerned, is not so much to ask the question, may a country be insolvent, may a central bank be insolvent, but rather the other question, is the payment system of this monetary union working efficiently and effectively? And the answer, as far as this is concerned, is a yes.
Thank you. Caroline Nachtergaal.
Yes, thank you, Chair, and thank you also, President Draghi, for being here. And I have two questions, and my first question is related to the new economic forecast that, well, let's say, flooded my news feed last week, and a potential slowdown of trade, and you mentioned it as well, that it's partly caused by the protectionist moves of the Brexit and also the Trump administration, might have an effect on global economic growth. And could you ensure the Parliament that the ECB, well, let's say, has enough room for maneuver in case of a substantial economic downturn? So that's my first question. The other one is a little bit more technical, it's related to the benchmarks. The ECB provides the Secretariat to the risk-free rate working group, and I'm really happy to note that this working group has made very good progress and that they reformed the new benchmark are in sight. So could you elaborate a little bit more on the transition of Enonia and Esther, the new overnight benchmark provided by the ECB? And my question is, are you, well, let's say, confident that the market participants will use the new index and that potential problems with legacy contracts will be limited? And the last part of that question is that for now, Euribor will be transformed to a more hybrid version that to some extent is still based on the subjective panels. And given the limited room for the majority contribution in the BMR, is it in your opinion feasible to come up with a permanent solution that is completely data-driven? Thank you.
As you've said, the last Governing Council acknowledged that the balance of risk for growth has moved to the downside, and it acknowledged the size and the persistence of the slowdown, and the reasons is the ones, some of the reasons at least are some of the ones you mentioned. Now, before I go to the policy response, the discussion in the Governing Council has indicated that the key factor that we have to look at is the persistence of all these various causes, various geopolitical factors. So protectionism, for example, many council members said explicitly that if there were all of a sudden clarity and peace in trade relations between US and China, much of this slowdown will probably wash out. Much of this, another source, is the anxiety surrounding the Brexit negotiations. It's quite clear there that even though, as we said many times, for the aggregate of the Eurozone, this may not be in real terms a big problem, although I really hasten to say that there are certain countries that are very exposed to that, others that are less. But also there is another element which I want to remind people of, that value chains across the Union are very difficult to spot. So one cannot exclude at all local examples of uneasiness following this. But certainly the very fact that these negotiations have been so protracted feeded into anxiety, and that is another issue that... and then, of course, political developments all across the euro area, and the slowdown in China. Again, we are confident that the government is actually taking appropriate actions there, So we are confident about the policy response by the government, and the waning effects of fiscal policy in the United States. So there are lots of factors like that. The answer, as far as our policy is concerned, is that yes, we have instruments, and in fact, these instruments have already started acting, thanks to this enhanced forward guidance we have that says that the rates will stay at the present level at least through the summer, and in any event until, let me read this just because it's, we continue to expect the key ECB interest rates to remain at their present levels at least through the summer of 2019, and in any case for as long as necessary to ensure the continued sustained convergence of inflation to levels that are below but close to 2% over the medium term. Not only that, but then when we go to the reinvestment part, we say we intend to continue reinvesting in full the principal payments from maturing securities purchased under the asset purchase program for an extended period of time past the date when we start raising the key ECB interest rates, and in any case for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. So the forward guidance is actually chained into the reinvestment horizon in this way, and we've seen how this has acted immediately. When we announced the end of the net asset purchases way back in June last year, markets did not react. And in fact, since then onward, if anything, interest rates went down, the term structure of the interest rates flattened and moved to the right, we say, basically placing the expectations of further hikes in interest rates at a more distant future than at the end of the summer. This by itself is already a reaction to the weakening of the growth momentum. So not only we have, the bottom line of this is not only we have tools in our toolbox, but these tools have already started reacting to the slower momentum. Now on the benchmark, now, as you said, actually, the Euribor's administrators is actually working on this reform to bring it in compliance with the requirements of the EU benchmarks regulation. So we will know the final outcome of all these efforts in the course of this year. Now, in the meantime, the working group is also considering a scenario where the reformed Euribor might not be compliant. So we cannot comment on the likelihood of such a scenario, but we can say that it's actually appropriate that it should be analyzed, considering that the identification of potential solutions lies with the private sector, together with the relevant supervisory authorities, namely FISMA and ESMA. Now, on the potential production of the term rate by the ECB, I think I have to be clear here. We are not, the ECB is not in a position to provide reference rates beyond the overnight maturity based on a purely transaction-based methodology due to an insufficient number of transactions. And this implies that at times expert judgment may be required for the production of such rates, but this judgment cannot come from a central bank. So it should reflect the borrowing costs of the credit institutions under the prevailing market conditions. At the same time, there may also be a conflict or a perceived conflict of interest if expert judgment executed by a central bank is interpreted as being related to the monetary policy stance. Rather, the development of suitable solutions will come in response to the challenges that only the private sector is equipped to identify. Thank you.
Thank you. Philip Lamberts.
Good afternoon, Mr. President. Always a pleasure to have you here, and well, hopefully we'll talk again before your mandate expires. I intend to come back in the next Parliament. Let's continue on a discussion we have already had a few times. I like the way you presented the story of the euro by presenting this as a pooling of sovereignty. And I would to some extent agree with you in a sense that before the euro, you had the two levers of monetary policy and budgetary policy covering the same geographical area, the member state, the nation state. We decided to pool the monetary policy, but without pooling at the same level the budget levers. And by that I mean if you carry out a monetary policy in an inhomogeneous state, which most are, of course the monetary policy will never be perfectly appropriate for all parts of the country. And this is where you need the budgetary policy instrument to rebalance your country. And of course, if you pool the monetary policy without pooling to a degree the budgetary policy, actually what you do is losing some sovereignty in the process. I've never seen the European integration process as a loss of sovereignty, but in this case, it is fact that you do not find back at the level of the federation, that is European Union, the same quality of sovereignty that you have at national level. So of course there's two answers to this conundrum. Either you find again the coherence at national level, so you exit the euro, which I'm sure you know is not our policy, or you bring the missing links or the missing parts to the federal level, that is a Eurozone budget, but going together with the ability to levy taxes. I mean, a real fiscal authority, able to levy taxes and to spend. That is our view. And I respect the views of those who say, no, we should do conversely, step out of the euro. But I'd like to have your thoughts about that, because, I mean, I do not believe that a construction that is just rules-based can really work.
Well, it's not an easy question, but first of all, let's look at monetary policy first. Until the Maastricht Treaty, each country claimed to have its own monetary policy. In fact, most countries didn't have any sovereignty over that monetary policy. Germany had. You're right. Germany had. And for all the other countries, there was a choice, either pegging the interest rates to the German rates or devaluing progressively. Some countries then claiming then sovereignty over monetary policy. But in fact, even the ones that were devaluing regularly didn't have sovereignty, because when you look at how you measure this sovereignty, namely price stability and control of inflation and unemployment, these countries did even worse than the ones that were pegging the interest rates, if you look at the numbers over a 15, 20 years time span. This situation was overcome by the creation of the institution of ECB, where even countries that didn't have any sovereignty before or lost sovereignty, didn't have any credibility, regained sovereignty and credibility. In the fiscal space, this same progress was, I don't know where it was, but it was considered, let's put it this way, it was considered more difficult because of the intrinsic political essence of budget decisions and the parliamentary control over these budget decisions, which is exercised at national level. While, in a sense, one may argue that the same parliamentary control was not being exercised as far as monetary policy was concerned even before the euro, but it has different historical, at sometimes yes, at sometimes no, it didn't happen. But basically, that was the situation. Given this fact, the rules route was chosen. Now, under a rule system, when is that you don't lose your sovereignty? Well, when the rules are not binding. When the rules are not binding on average, of course there are times when they're binding, there are times when they're not binding, then basically the country retains its sovereignty. But how's that? Well, a country loses sovereignty when the debt is too high. And when debt is too high, there is not even need of rules to limit the country's sovereignty. It's the markets. Markets tell the country what is affordable and what's not, what is credible and what is not. So the country loses its sovereignty, rules or institution, regardless that part, when debt becomes so high that each policy action has to be scrutinized by markets, namely people who don't vote, who are outside the democratic accountability process. And that's why there is such a resentment. But that's a fact of life, and this debt has been produced by political and policy decisions taken by these countries' governments. I think that's one of the reasons. What is the beneficial effect of rules? It's that if they are complied with, they foster convergence. And that's the other part of sovereignty. In a monetary area, you can't have sovereignty if your country, if your economy diverges regularly, constantly. If the country is lagging behind the reforms and competitiveness, and on top of that has high debt. So then the sovereignty, but again, the reasons for losing sovereignty, I think I would agree with you. They certainly have to do with the framework and with rules. Moving from rules to institutions, probably this issue, this aspect would be partly addressed. But before, way before, they have to do with policies. Sovereignty is lost because of wrong policies.
We don't need a Eurozone budget?
No, I think it's a combination of things. One needs, first of all, because of I think what I said in the introductory speech. I'm going too.
Yeah, we had some other slot going at this time, so if
we're
very, very short, we can conclude because it's interesting. We will recover. Don't worry.
It's.
Okay, I'm sure there will be
We'll
other questions on EMU that will allow to conclude elaboration on the role of Eurozone budget. I don't see the GUE speaker. Mr. Monod.
Monsieur le Président.
President Draghi, good afternoon. I'd like to say I really appreciated the monetary dialogue during this term. However, I'm less enthusiastic than you are when it comes to the overall assessment of what the ECB has achieved and what the single currency has achieved over the last 20 years. The socioeconomic results in my country, France, are rather appalling, and I think the same applies to your country, Italy. But I'm going to talk about something else. On the 14th of December, the Eurozone Summit backed a set of proposals on the future EMF, European Monetary Fund. This includes going for the CACs, the collective action clauses in the debt. We're talking about a possibility of a blocking minority of 25% instead of the individual ones at 33%. The idea is to make restructuring debt easier. So my first question is the following. The ECB can't have more debt of a country than the blocking minority threshold, so that it doesn't find itself voting in favor of restructuring. To vote in favor of restructuring would be direct financing. And the Eurosystem and the ECB has 25% of Euro debt on the basis of the QE plan, Putting an end to the QE plan and this 25% is a consequence of the reform of the CACs. So will the end of QE be linked to inflation in the EU and the reform of the CAC?
Now, the EMF, the conclusions adopted during the Eurozone summit says that the EMF should be in a position to negotiate restructuring with private creditors. Would this new restructuring system for sovereign debt lead to panicking of investors that would have pro-cyclical effects, and would that not lead to a payment default? So will the EMF powers not potentially lead to a lot of trouble for the ECB to carry out its monetary policy? Thank you.
Thank you. The first question is, the answer I think is no. We decided to discontinue net asset purchases back in June, not because we were bumping against the limits that we ourselves actually set upon our own action. And no, because we, as a matter of fact, I think we do have space for, but the point of that, the main point of this decision is that the stock we have achieved, which, as you said, is now about 25% of total government debt in the euro area, government long-term eligible universe, basically, is so large that the net additions to this stock were having a more and more negligible effect. And so we were confident with the stock that we had achieved that we would continue producing the monetary accommodation, the stimulus that was necessary, is necessary for inflation to converge to our aim. And I mean, if you, on the other hand, also, what we've seen since June is that interest rates, I was saying this before, actually went down, and the whole term structure of interest rates became more accommodative. So all this told us that this decision was not monetary tightening, and the monetary accommodation was in place and would be kept in place. The second question you asked is about the role of the EMF. Actually, there is no explicit mandate to the EMF to be the renegotiator of debt with countries. The words have been very carefully crafted in saying, if I'm not mistaken, that it would be a facilitator, or to that extent, exactly for the reasons you're mentioning. It's quite clear that high debt stocks in some countries are a problem. But it's also clear that any consideration of this should keep in mind financial stability, because you don't want to have a remedy which is worse than the illness. And it's also true that these high stocks have been there for 20 years and longer. So it was a very, very careful and cautious attempt to basically say that the IMF would have a role in case there were some sort of general renegotiation. But I don't think anybody would have thought that the IMF could initiate a renegotiation of this. By the way, the IMF itself can be a facilitator for debt renegotiations when the country decides under a program that has to renegotiate on its debt. Thank you.
Thank you. Danuta Hübner.
Thank you, Chair. Mr. President, just one word of thank you from me. I would like to say that for me, those dialogue with you have been an irreplaceable source of knowledge, so thank you very much for this. I have two short questions. One, I would like to go on to follow on this issue of the end of the net asset purchases and this shift to this phase of reinvestment. And you talked about the rationale and behind that. And my question to you is actually, do I understand correctly that in this period now, you pay attention as ECB to different parameters when you make decisions than it was in the years when you were purchasing the net asset under the program, and now in the reinvestment, you just look at different parameters, or is it the same story, maybe different intensity? And my second question is, are you already now in a position to look back at the whole period of quantitative easing and to see whether there is any evidence whether, or if so, how the mechanism for the transmission of monetary policy has evolved or changed in this period of quantitative easing? Thank you.
Thank you. Certainly about the what happened with the discontinuation of the net asset purchases, which, as I said, stabilized the existing stock. It's not reducing the stock. What happened was that we say there has been a rotation of instruments from the net asset purchases. Now the main instrument of our monetary policy is the forward guidance. So it's the interest rates and the reinvestment. Natural question that people used to ask before the end of the net asset purchases was, yes, but for how long are you going to repurchase the bonds that come to maturity? In other words, when are you going to reduce the size of the balance sheet the way the Fed has been doing now? And the answer to this was to change the horizon to the first interest rate hike, which is itself determined by date, as we said, at least through the summer, or by state, depending on whether it's necessary to continue, as I just read a moment ago. So this has been a rotation of instruments from the previous setup to now. The evidence of the contribution that QE gave to the resolution of the crisis is actually quite overwhelming. We can go through a long. I mean, if we consider as a reference time, say 2014, mid 2014 onward, we have a long reference of indicators showing the impact of the QE in resolving the crisis, from interest rates, from bank lending, to we have a number that basically says that over 3 years, between 2016 2019, only QE contributed to 1.9% more of growth and 1.9% more of inflation over the time span. But that is a very summary statistic that I wouldn't really make too much out of it, but it's just trying to capture this. But any aspect of the financial system, let's not forget the financial fragmentation we had in 2014, when we were lowering interest rates, and there was no response by banks in lowering lending rates. And in some countries, in many countries, but in some countries, yes, they were lowering. So there was financial fragmentation. The same corporation that had two companies, two branches, one based in a vulnerable country, another based in a core country, would pay quite different rates when they went to borrow to banks. Now, this has become, thanks to QE and other monetary policies, not only that we've undertaken, has become really a far distant memory. That is, thank you.
Thank you. Paul Tang.
Thank you, Chair. Thank you, Mr. Draghi. It's always good to have you here and answering our questions. I appreciate that. I think the resilience of the Eurozone is always a topic of debate, and I hear you emphasize, and not just you, but many central bankers, resilience in the Eurozone that comes from private risk sharing. But we must also conclude, I'm always a bit surprised that private risk sharing in the Eurozone is still limited. And in fact, the progress in the Capital Market Union has not been, let's say, tremendous. I think 3 out of 13 proposals have been adopted. So what do you make of the actual progress in the Capital Market Union? Has it contributed contributed to the resilience in the Eurozone area? That's my first question. Second is related to sustainable finance. I was pleased with the speech by Benoit Cœuré in Berlin, where he set out what role the ECB has in sustainable finance. I was pleased because I think that if we want this change in sustainable finance, and we do want this change, that supervisors play a leading role, and especially the ECB. This is also a matter of resilience. We will have a transition to a sustainable economy with shocks in which there will be the demand for monetary policy to react to. How do you think that currently the climate change and risks and climate change policy are priced in, or can we still expect a bumpy ride along the way as countries try to implement the Paris Agreement?
I agree with you. The capital market union and the conclusion of the banking union would be powerful from a risk-sharing viewpoint, in a sense making less compelling, though still important, but less compelling the case for having a budget. If one can absorb, as we see in the United States, much larger percentage of the shocks are being absorbed through financial markets, by the private sector, than it is in the euro area. And correspondingly, a much larger part of the shocks are being absorbed by the national budgets in the euro area than it is in the US or in other currency areas. So still, progress is slow to come. I think what is becoming, however, increasingly clear and increasingly unacceptable is no action on both fronts. One has got to make up its mind and decide. I don't want a budget. Then you proceed doing the banking union and the capital market union. Now, of course, it's easy to say, of course, there are political issues and political problems. And of course, I think we, especially as central bankers, have to be humble about that. Because in the end, these are important political decisions. But the clear line of action there is to go forward with risk reduction and risk sharing together. And there, of course, it's a matter of finding the right pace. The December summit, I would say, has shown some intention of moving there. Some first steps have been undertaken. Some mandates have been given to further study certain issues, which all things that have not been made for a year and longer. So there has been a movement. And of course, we wish it were faster, but it will take its own momentum. I think we have to be hopeful there. On climate change, it's quite clear that as we move forward, climate change related risks are becoming more and more apparent. More and more apparent than they were not long ago, even 5 years ago. If you let's consider rather the banking sector, we consider the insurance sector. I think all insurers are much more aware of climate change related risks than they were 4 or 5 years ago. So they will become something that certainly supervisors will have to look at. But to say that it's going to be an easy transition, I think there is a cultural change that has to take place here. And so we all have to work in that direction. I completely agree with Mr. Cœuré about his speech. Thank you.
Thank you. Werner Langen.
Ja, vielen Dank, Herr.
Yes, thank you very much, Chairman, President. I'll repeat the praise that you've already heard from a number of colleagues. I could even add to it. We have gone through some very difficult times in this open debate in the committee. You've heard a lot of criticism. You could say these days that the euro is a success. But I do remember the farewell speech of Mr. Greenspan in the Congress. We had travelled there with the Econ Committee. He said the euro will fail. Today, I think it's clear that that was all very wrong. The ECB has had a fair share of the credit in doing so. You say we have to overcome the shortcomings, we have to deal with the national problems and complete banking union. But I've got a few questions here. The reliability of fiscal policy has always been a big question mark. What kind of additional competence should the currency commissioner have? We're not going to get a European finance minister. I think the decisions in December were rather disappointing in terms of the overall picture. Second question. The construction of the ECB, is that part of the reform package? In the ECB, each country has a vote, and there's no voting in terms of the share of the capital. I mean, in the purchase programs and the target programs, there you do have a question of capital contributions. And then, given the economic climate, worldwide turbulence, experts are saying that getting out of purchase programs like the Fed or moving towards a Japanese-style situation with no limits on purchases of corporate and sovereign bonds. Well, I mean, what is the right middle route between those two positions?
I'm sorry, I'm not sure I have understood the first question.
Ich will es kurz ergänzen.
Well, I'll do it again briefly. The currency commissioner, should they get more competencies because the member states have not stuck to the pledges that they made themselves?
Thank you. The the future, you're asking me a question. I'm actually quite biased about answering it, because I'm answering the second question first. You're asking whether the ECB should be part of this reform package in the future. We are, as I said, I'm a biased observer in this, but we are pretty satisfied with the current statute. And my sense is that if we are to reopen a discussion about the statute of the ECB, we would do so under two conditions. The first is that the European Court of Justice has found behavior in violation of the statute or should find reasons to update the statute, but we haven't seen that. And the other is that if the ECB has not complied with its mandate under the present statute, and hopefully we are not in that position either. So I can't rule out any development in the future, but we seem to be at the present time rather far from any reopening of discussion about the treaties of the size and the extent that was suggested by you. On the first question, I'm sorry, the currency commissioner, what is the currency commissioner?
If there is a finance commissioner, how he can enforce the fiscal rules?
Okay. If there is, it was being translated by the currency commissioner, so I couldn't understand what the currency commissioner is. Much of this, you see, we are at the stage where, if we look at the last 20 years and we compare how the integration of monetary policy has performed with how the integration of fiscal policies has performed, I think that all of us would agree that the first performed better than the second. So we move there. How would this institution work is an open question, and it's a big question. In other words, some of us are convinced that this is the arrival point, but I don't think any of us would know with absolute certainty how the governance of this institution would work. By and large, but let me add one thing that is actually relevant, because when we look at how the Eurogroup works, about discussing each other's budgets, even the budgetary plans, helped by the Commission and the possible scrutiny of the measures in advance, during the discussion, ex post. Well, we aren't that far as the Eurogroup as a potential embryo of an institution like that. And so I can only say this at this point in time, but it's a broad, broad topic. Thank you.
Thank you. Peter Simon.
Ja, sehr geehrter Herr Draghi, an dieser Stelle.
Mr. Draghi, at this stage, when we've talked about the previous years and what the ECB has done to tackle the crisis, I would like to add my mite by saying what I once said to you in a personal conversation. I'm convinced that if you had not been there when the politicians were not able to do proper politics in the member states, if you had not been there and able to enact the policies that were necessary, we'd never have saved the euro. So thank you very much for that. I have the question about the completion of the banking union, which you mentioned as an alternative. If we don't want a European budget, you didn't say an alternative solution, but you did say we have to decide either a European budget or the banking union. We're in a situation where trust between the member states has not exactly increased over the years. Indeed, it has decreased. And if we see what we need most in order to complete the banking union, then we need trust in the banks and the trust in the states which underlie those banks. Now, if we look into how we could build this trust, do you think that there are ways forward that we've not used and that we need to discuss? We've had a lot of discussions. We talked about old debts, but we talked about amortization of debts. What other ways forward are there? So that apart from sanctions, which was something that was discussed before, how can we have a carrot-based system to make progress and to construct confidence? Because that's essential for any further steps. Thank you.
Thank you. I agree with you, and I think I've made this point many times. Trust and convergence are the two pillars upon which progress is being made in deepening the economic and monetary union. Convergence is achievable by the buoyant economic growth, but also by the structural reforms. It's both things, not only trust, or better. There can't be, no matter what the intentions are, there can't be trust if there is no convergence, if the country becomes weaker and weaker. So both pillars have to be. Now, as far as, if we limit our attention to the policy actions, trust is regained, or gained or regained, depending, addressing certainly the standing issues that have made such a progress so difficult. So legacy issues, for example, the NPL issues in some countries, the level 2 and 3 assets in some other countries, the level of debt in some other countries, the sovereign debt present in banks' balance sheets in some other countries. All this should be addressed, but should also be accompanied by in a clearly identified and specified policy path, should be accompanied by good intentions, commitments to proceed on the risk sharing side. The ECB position has always been two things go hand in hand, and there should be a well-specified calendar where things happen, and with numbers, with figures. And so I think in this sense, the December summit has given some impetus to this. There is a high-level working group that has the mandate to work on EDIS, on insurance. And it's been accepted the fact that the mandate should be broad. And as far as the ECB is concerned, the ultimate, the arrival, the end point of this process should be a system that is mutualized across countries. It may well take a long time to get there, but in this area, as well as in many other parts of the deepening of the monetary union discussion, to have the end point clear gives an enormous energy to both sides, both in terms of risk reduction and in terms of risk sharing. I think that should be in our view at least, the way to move forward on both sides. Thank you.
Thank you. Fulvio Martuscello.
Sì, grazie.
Thank you very much. President Draghi, I would like to thank you as an Italian because you've made us feel proud to be Italian during a time where we don't have enough leaders in our country, quality leaders. So a big thank you to you for this honor and for really have accompanied us in this whole process. I have a few questions. One is about the situation in Italy, in our country. The Italian Central Bank and the fund said that, and the IMF said that economic growth is slowing down considerably, and that the forecasts, instead of being 1%, have been downgraded to 0.6%. And this was not just said by the Italian Central Bank, but also by the IMF. And they said that sovereign debt risks have reduced internal demand, and therefore economic growth will slow down, will probably slow down. Today, Minister Savona in Parliament said that these analyses are based on obsolete instruments and that everyone should believe him, who was a professor, and that everything will be okay. Do you really think that these are the data that we should be expecting? The reforms promised haven't taken place. We haven't had the reforms expected, so what do you think will happen? Now, the second question, now we have this 500 euro note issue. Will no longer be printed, and this is a measure to fight against crime. So I would like to know whether there's going to be an instrument to check what will happen when someone tries to deposit 500 euro notes in the future. So will this decision go hand in hand with some kind of supervisory measure in the banks?
Thank you. Thank you. Now, let me just say very few words about Italy. Certainly the conclusion of the dialogue with the Commission about the budget was I think, a positive news. As you've seen, spreads narrowed a little. So all in all, everything that contributes to the dialogue and to compliance with existing rules narrows the spread and makes financing conditions better for everybody. The external environment, as I said before, won't be that buoyant as it's been in the past, and Italy's economy is growing less than it used to do in the past, than it was expected, significantly less than it was expected. And I mean, this has happened by and large to most, if not all, countries in the Eurozone. It was more marked in Italy. As in when everybody was growing, Italy was growing less than the other countries. So it's too early to think about whether there is a budget, there's going to be need of a budget correction or anything like that. We have to see also what are the budget outlays there. And we have no number or, in fact, any view on how the outlays will, and we have to see how the tax revenues will behave. So it's very early to foresee any instance like that. On the 500 euro notes, you may remember that on May 4th, 2016, the Governing Council decided that the 500 euro banknote will be excluded from the Europa series, and the issuance of this denomination will be stopped around the end of last year, beginning of this year. And now the national central banks will provide their customers until and including 26th January 2019 with 500 euros banknotes. Now, why are we saying that? Because it would be only natural to think that discontinuation of the 500 euros banknotes is normal. After all, if we think who the users are often of these banknotes, because there are certain parts of the Eurozone where the use of these banknotes is actually cherished. And so the decision was taken. It was widely applauded in some parts of the Union, widely controversial in other parts of the Union. But basically, the decision's been taken. Now, for ensuring a smooth transition and for logistical reasons, the Deutsche Bundesbank and the Austrian National Central Bank will issue 500 euros banknotes until and including 26th of April 2019. So after the issuance stops, the 500 euros will remain legal tender. So, and therefore, they will continue to be used as means of payments and store of value. So that's the answer to that. We'll treat it like any other banknote. Thank you. Well, not we, as a matter of fact, the national central banks will treat it like any other banknote.
Thank you. Notis Marias.
President, I have two questions that are related to Greece. Now, one is non-performing loans. As you can imagine, we can't deal with NPLs with auctions and taking away the property from Greeks who have become poor because of the bailout. But we can't sell off NPLs. We can't have banks selling off the funds to vulture funds. That's what we call them, for peanuts. I have said many times that we should have a special fund to save these people, to the tune of 5 billion euro, so that this fund can buy the NPLs at the first price offered by the funds. In other words, about less than 10% of their value. And then after that, those who have gone bankrupt can then pay off their loans at the same price. What would the ECB's view be of such a setup? Because on the one hand, those borrowers who cannot pay would be protected protected, but at the same time, the banks would be able to get rid of these NPLs to the tune of 50 billion euro. Now, my second question is about quantitative easing. Greece has been excluded from quantitative easing, while the Bank of Greece, in other words, the Central Bank of Greece, is participating in QE and up to 2017 had paid 62 billion euro. So my question is, when are you going to include Greek state bonds into QE? You said in June that you yourself would do some research in the ECB to see what the sustainability of Greek debt is. Have you done this research and come up with this report? And when will Greek company bonds be included in quantitative easing? And when will central banks be able to buy them? Or when will even the Greek central bank be able to buy them? Thank you.
Thank you. I mean, the answer to the second question is we will do it when they will become eligible. Right now, they're not eligible. We have criteria, and they are below these criteria. On the first point, we are aware that, by the way, I can't really comment about this because all this is the object of negotiations that are taking place exactly at this point in time in Athens. And, but certainly in reducing the stocks of NPLs, we should be aware that some of the owners of these debt, some of these debtors are actually part of a much broader social problem. And on the other hand, you have another part which is just strategic borrowers. So what the government, and I understand the government of Greece has done that, tries to distinguish between the two categories. But in addressing the poor debtors, there are two ways of doing it. One way is to basically postpone the problem and create a problem for the banks. And the banks then will not be able to lend to, or to support the private sector as they would otherwise. The other is to basically get rid of this, in other words, basically maintain the culture of payments, and so the banks would not be affected, but help directly the poor that are the owners of these bonds. I think the Greek government has made substantial progress on this, but we have to be always alert on that Greek banks have just come out from a long, protracted period of time where they were not able to support the private sector in Greece. Now they are well capitalized. Now they can be of real support for the economy, and we have to be mindful about not affecting them negatively for the future.
Do I have 10 seconds? Okay.
Yeah, no, because we are really, I think you will have the speaking, I see you have the speaking time, and I'm sure you will follow up on this. You have a second speaking time. So let's move on with Pedro Silva Pereira.
Thank you, Chair. President Draghi, so we are facing a slowdown in the economy. According to your forecast, a new recession is not likely to happen in the near future, and you remain confident that inflation will continue to converge to the medium-term target. But anyhow, we are facing a slowdown, and economic growth is weaker than expected. So the obvious answer is, what can we do and what should we do about it? Certainly not only cross our fingers. Now, we take note of your answer regarding monetary policy. You say that monetary policy remains supportive enough, and if necessary, more will be done by the European Central Bank. But as to the rest, I have two questions. The first one is on the political risks, beginning with Brexit. Would you agree with the British Central Bank that the no-deal scenario is the worst one? And in fact, we are 8 weeks from this timetable of Brexit. Would you say that the first thing we should do to improve conditions for economic growth is to avoid the no-deal scenario? Second question on economic and fiscal policy. The European Commission in the annual growth survey for 2019 is calling for more high-quality investment and more expansionary fiscal policy in the surplus countries. Would you agree that high-quality investment and more expansionary policy in the surplus countries should be part of the toolbox to promote economic growth and face this economic slowdown?
Thank you. Well, on your question about Brexit, I'm kind of wary about answering because we never wanted to interfere in a debate, in a discussion which is already quite complex. So, and on top of that, we should remember that the ECB is not party to the negotiation. We certainly monitor, we cooperate with the Bank of England, trying to be prepared as far as financial markets are concerned to any scenario. And we've done substantial work with them. We've been having a working group working for several months on that. So beyond that, I don't think we would probably discuss what are the pros and cons of different outcomes of the present political debate in the United Kingdom. So our main responsibility is really to make sure that as far as we are concerned, we have identified the contingencies under any scenario, and we have identified what the needed action is going to be. Which means, by the way, that many of these contingencies don't need any action by the public authorities, but they can be coped by the private sector itself through mitigating action. But as I think we've discussed on another occasion, there are certain areas where it's important that we know what to do in advance. And certainly the statement by the Commission, the recent statement by the Commission about the equivalence and the conditional and temporary equivalence has been of great help. Now, on the second point, yes, I agree with you, and I agree with the Commission. We talk a lot about the size of the budgets in different countries. We talk much less, because it's much more difficult, about how growth-friendly should be a budget. What we have seen I would say in the many years before the crisis, in 7, 8, 9 years before the crisis, in many countries, we've seen a sizable increase in current government expenditure, a strong, dramatic decline in investment, in public investment, and a significant increase in taxes. Now, it's no wonder that when the crisis struck, certain countries that have been pursuing this policy, which is exceedingly growth unfriendly, were more vulnerable to the crisis. And so, on top, having piled up a sizable amount of debt, which reduced fiscal policy space to react to the crisis. So the instance of finally focusing on the composition of the budget is very, very welcome, and we can only agree with that. The second part of the Commission recommendation is about a symmetric application of the macroeconomic imbalance procedure. And that's obviously, we are on the same side on that as well. But we have to be making one step further and ask ourselves, what does it mean? What does it mean for a country which is at full employment and has been at full employment now for a certain number of years and experiences labor shortages by and large in many parts of its economy, to suggest that more expenditure should be undertaken? I think that's a relevant question. Certainly some of this will have to, if this takes the shape of investments in digitalization, in technology, in infrastructure, where this is needed, it's certainly welcome. But it's only the first step. That we should ask ourselves, how could this more expenditure be materialized, and how could this greater expenditure by surplus countries spill over onto the rest of the Eurozone countries? But this is not at all obvious. Thank you.
Thank you. Wolf Klintz.
President, you have been asked, as you put it, a number of not so easy questions. Let me ask you two very simple questions. The first one, the first one concerns membership of the Eurozone. 26 out of the 28 members of the EU have, in a legally binding way, committed to eventually introduce the euro. Now, 7 still are not yet members of the Eurozone, even though 1 or 2 would meet the conditions for membership. How do you see this development? Would you say it's desirable or even necessary that eventually those, since they have themselves committed in a legally binding way, be forced to join? And which development do you foresee? Do you see that 1 or 2 at least over the next 2-3 years might apply for membership? Question number 1. Question number 2, when I was chairing the special committee on the financial crisis, with Pervenche being the rapporteur, we also looked into the role and performance of the credit rating agencies. And we came to the conclusion that it would be very desirable for the European Union to have a European credit rating agency that was not dependent upon the US influence. It should have been, according to our ideas, it should be a private, not public rating agency invested with private money, and it should be an agency that eventually also could change the business model, not be issuer dependent, but maybe also investor dependent, etc. Now, I personally made this a pet project of mine, and I tried to sort of find investors that would participate in such a project. At the time, that was unsuccessful. In the meantime, I do realize that a number of agencies have come into existence, and one is particularly successful, is working in more than 6 countries, has more than 200 employees with more than 30 nationalities, and it is being accepted also by companies, institutions like the European Investment Bank. However, they tell me that the European Central Bank still does not consider them to be equivalent to the 3 big ones. The name is scope. So what is the reason for that?